Investing in the stock market can be exciting, but what happens when things don't go as planned? I made some mistakes, lost $5,000, and learned some hard but valuable lessons along the way. If you're new to investing or just want to avoid making the same mistakes, keep watching. In this video, I'll break down what went wrong, the key lessons I learned, and how you can protect your money while still growing your wealth in the stock market. The $5,000 loss, what happened? Let's start with how I lost $5,000. It wasn't a single bad trade. It was a combination of bad decisions, inexperience, and emotional investing. Here's what happened chasing hype stocks. I invested in companies that were being hyped up on social media instead of doing my own research. The stock prices were already inflated, and when the hype faded, so did my profits, trying to time the market. I thought I could predict short-term movements and bought stocks at the wrong time. Instead of waiting for a better price or using a long-term strategy, I jumped in based on fear of missing out, not having a clear strategy. I bought stocks without a proper risk management plan. I didn't set stop losses, didn't diversify properly, and put too much money into just a few stocks. Ignoring fundamentals. Instead of looking at a company's financial health, earnings, and long-term potential, I focused on what was trending. That led me to buy into overvalued companies. Panic selling. When the market dropped, I got scared and sold some of my stocks at a loss instead of staying patient. If I had held on to some of those investments, I could have recovered my losses over time. Key lessons I learned. Losing money in the stock market is painful, but it's also one of the best teachers. Here are the biggest lessons I took away from this experience. Do your own research. Never invest based on social media hype or someone else's advice. Always look at a company's financials, including revenue, earnings, and debt, industry trends, and long-term growth potential. Valuation metrics like the price-to-earnings ratio. If you don't understand why you're buying a stock, you shouldn't be investing in it. 2. Timing the market is almost impossible. Even professional investors struggle to predict short-term price movements. Instead of trying to time the market, focus on long-term investing with strategies like dollar-cost averaging, which means investing a fixed amount regularly, regardless of price fluctuations, buying strong companies and holding them for years. 3. Diversification is key. Putting all your money into one or two stocks is too risky. Instead, spread your investments across different sectors such as technology, healthcare, and finance. Various asset classes, including stocks, exchange-traded funds, and real estate, international markets, to reduce country-specific risks. Diversification does not guarantee profits, but helps reduce the impact of a single bad investment. 4. Set a risk management plan. To avoid big losses, follow these risk management strategies. Use stop losses to set a price at which you will sell to limit losses. Only invest what you can afford to lose, and never put money in the market that you might need in the short term. Keep an emergency fund so you don't have to sell investments during downturns. 5. Patience pays off. The stock market rewards patience. Many of the most successful investors hold their stocks for years, even decades. Instead of reacting to daily price movements, focus on long-term growth. How you can avoid my mistakes. If you're new to investing or have had losses, here's how you can avoid making the same mistakes. Educate yourself by reading books, following credible investors, and understanding basic investing principles. Develop a strategy, whether it's value investing, index funds, or growth stocks, and stick to a plan. Think long-term, since the market has ups and downs, but historically trends upward over time. Control your emotions, because fear and greed are the biggest reasons people lose money. Stick to logic, not emotions. Final thoughts. Losing $5,000 in the stock market hurt, but the lessons I learned were worth much more. Investing always comes with risks, but with the right approach, you can minimize losses and build long-term wealth. If this video helped you, let me know in the comments. Have you ever lost money in the stock market? What did you learn from it? Don't forget to like, subscribe, and turn on notifications for more investing insights.